Good evening, friends. I am Vijayamohan. I am back with you to talk about stock market, investment strategies, and techniques. Today, first we will have a few words about value investing and growth investing, or otherwise called as value stocks and growth stocks. Thereafter, we will talk about the result season in a few cases. The value stocks versus growth stocks is a very important concept for any long term investor. Actually, you can have value stocks, growth stocks, and hybrid stocks also. Value stocks look at the present state of a stock, whether it is available at a price which is worth the value behind it, or more than the value behind it, or less than the value behind it. Suppose a stock is considered by you to be worth more than the value behind it, more than the price behind it. The value is more, in your opinion, compared to the price. Then it is a value stock, and what you are doing is value investing. Now, generally speaking, price is the barometer of value for almost all stocks. But it so happens in the case of some stocks that presently they are undervalued, which means the price is lower and the intrinsic worth, intrinsic value that is already there in the stock is higher. It can happen due to many reasons. One reason is the market has not yet fully analyzed the stock's potential as on today. Then the price, the ongoing price, current price may be much less compared to similar stocks in the market. This one stock is value is higher, price is lower. So if you spot it before the others, you are lucky. That's a value stock, and what you are doing is value investing. But sometimes a stock may be undervalued due to certain scandals or perceived scandals, or due to some perceived irregularities committed by its management. So, for the time being, the price may come down below the intrinsic value. It happens in respect of many stocks, but subsequently they will recover if the scandal is settled in its favor, if the irregularity is found to be baseless. It has happened in respect of many stocks and will go on happening. Now, whenever there is a scandal or some perceived irregularity in the market and the price is beaten down by the market, that probably presents an opportunity to you to find a value stock to make a killing by purchasing at lower prices than what it deserves. The second types of stocks are growth stocks. Growth refers to future growth. There are many stocks which have got huge potential to grow in future. So their current price does not indicate its future potential. Now, if you know its future potential, you can buy the stock now at current day's price and wait till the company completes its expansions, enhances its turnover, sales, and profits. And when it enhances its sales and profits, the market price of the company definitely goes up, giving you a much better return. So the question arises, value stocks are better or growth stocks are better? Both are good if you know how to value them. In some cases, it so happens it is already a value stock, but it also has a large future potential. If you are able to find such a stock, which is possible in a huge market like that of India, you are lucky. A value plus growth stock, a hybrid stock rather. So a growth stock has already charted out its plan or is likely to chart out its plan for expansion over the next 5 years, 10 years. But here you will need to consider how the expansion schemes are being implemented by the company. If the company is likely to take 3, 4, 5 years to complete one phase of expansion, or the whole expansion is in one phase, then you will have to wait for that 3, 4, 5 years, which is not possible for a small investor. It may be possible for some investors with huge funds who don't know where to park it. So they can afford to wait for 3 years to make a killing after that 3 years or 4 years, 5 years. But most small investors would like to see the expansion going in phases. Every 6 months, one expansion, or even less than that. So, a phase by phase expansion is preferable when you are valuing growth stocks and going for buying them. Generally speaking, when companies are growing at a huge, furious pace, they are likely to pay no dividends or less dividends, whereas value stocks are likely to be paying good dividends. So this is also one of the indicators that you can see. Value stocks can also be found out with reference to the book values. Suppose the book value is 100, but the market price is 80, then clearly there is a mismatch between value and price. So that's a value stock. Likewise, if the price earnings is much lower than the market average, then also it is a value. It is likely to be a value stock. Not all stocks which are lower priced are value stocks, because some stocks have got bad managements and are unlikely to grow, or even if they grow, they are unlikely to reward the small investors. They are not value stocks. So, value stocks have honest management, must have honest management, but value or growth stocks both. Then only you can consider whether it is a value stock or a growth stock or a hybrid stock. Now we will see one or two results which have come. I will talk about results only in case where the results are satisfactory, good or excellent. I will give the statistical information. It is for you to judge whether to go for them or not. Today, the INDUSIND Bank, one of the premier private sector banks, has declared its results. The interest earned, which is a first parameter for any bank to be considered, has grown year on year 21.41%. Anything above 20% is good. Interest earned has grown more than 20%, 21% in fact. Quarter on quarter, sequentially also it has grown 8.48%. But the total income has grown only 16.21% year on year and 7% quarter on quarter. Interest expended has grown by 22.19%. Interest expended has grown by 22.19% year on year, whereas interest earned has grown by 21.41%. So there is a marginal increase in interest expenditure. And quarter on quarter it has grown by 10.47%. So interest expenditure is increasing more than proportionately. Operating profit has grown only by 12.54% year on year and 6.29% quarter on quarter. Provisions have come down, which is a good thing. Provisions have come down by 22% year on year, but have gone up by 42% quarter on quarter. Because of lower provisions, profit before tax has gone up by 25.54%. And on quarter, there is no increase, just 0.37% increase. The tax has grown by 23% year on year, but come down by 2.34% quarter on quarter. Net profit has grown by 26.81%, which is impressive year on year, but quarter on quarter it has grown 1.8%. EPS, quarterly EPS is 15.73. Year on year growth is 26.35%. Sequential, that is quarterly growth, is 1.68%. The gross NPA percent has grown by 25.81% year on year, but on absolute basis it is just 1.17%. Net NPAs have grown by 30.77%, but in absolute term the percentage is just 0.51%. The return on assets is a healthy 1.86. The market price currently is 1,818, and on that price the price earning comes to 28.89. The market price last year around this time was 1,432, and from then the stock has grown 27%. INDUSInd Bank has been growing more than 20% in terms of interest and more than 25% in terms of profits. Sometimes it is touching 30% profit levels also. So you make your analysis further and decide what you would like to do, buy, sell or hold. The next stock I want to talk about is Tata Sponge Iron. The revenue has grown 31% year on year and 13% quarter on quarter. Expenditure has grown much less, by 14% year on year and 8% quarter on quarter. Profit before tax has grown very well, 119% year on year and 30% quarter on quarter. Tax has grown 109% year on year and 28% quarter on quarter. Net profit has grown 124% year on year. Net profit has grown 124% year on year and 31% quarter on quarter. The EPS has grown 120% year on year, 30% quarter on quarter. They are paying dividend 20 rupees per share of 10 rupees face value. Current market price is 1,140. Last year market price was 847. So there is an increase of 34%. The current price earning is around 10. So thank you for listening. I will come back to you with more results and more concepts of investing. Thank you.